Issel is Head of Equity and Credit APEC, Chief Investment Officer at UBS. He's joining us now to take some questions. Thanks very much for joining us, Hartmut. Great to have you with us here. Prashant this side. So describe the sort of environment for especially equities to us. I mean, I think the two best performing large markets in the world by far have been India and the US. There's been absolutely no stopping. And this is not just 2024 so far. It's been 2023. It's been 2022 as well. Do you think there is more room? S&P overnight topping 5,600. Large caps, mega caps doing very well. What's your reading?
Yeah, maybe starting with the US first. Certainly a market that, in its own right, I mean, you find all the AI proxies there. Naturally, it's a very interesting one. We just do feel, from a valuation point of view, is that something that at these current levels provides, sort of unusually high upside, right? We think probably not so much, right? So we have a sort of neutral position, and we also think, upcoming rate cuts, inflation falling, all these things that were talked about before, is already to a large degree reflected in the valuation. India, possibly slightly different story. India also, I would argue, the earnings growth is a bit higher. So even though India is also, from a valuation point of view, right, if you put it in a global context, not necessarily cheap, then again, I don't see a lot of reasons why the valuation should come down to a large extent. And then you put in, we think about 13% thereabout earnings growth. So yeah, India is probably interesting, but we have markets in the region here in APEC, especially China and Korea, where we think we see even more upside, that they are much more beaten down, their laggards. We think technically, at least, these could, in the next couple of months, this could be their time, actually.
But Hartmut, what's the big call for global equities for the second half of the year? The first half has been pretty good, right, across markets driven by this massive tech rally. In the second half, do you see enough triggers that this rally, this momentum continues, and what would they be?
Yes, certainly, as always, right, as an analyst, I will start with earnings that looks pretty solid, pretty much no matter where you look, right? Either staying steady, like India also remaining fairly high, right? Or in other cases, like UK is a market we particularly like in Europe, right? Where it even turns from negative to positive. We have an even better delta. The US is fine. So that works well. And then on top of it, where you have various central banks already starting to cut or have started to cut, Fed, we think, will follow as early as September. That's our call, right? And then another one in December. So also from that point of view, it's supportive for valuations. However, we do think, given what has already happened and to some extent the performance has baked that in, probably the asset class we even prefer is bonds, especially high-grade bonds. But nonetheless, we do see upside pretty much on pretty much every of the large stock markets around the globe.
Hi, Hartmut, and thanks a lot for joining in. This is Nigel on this side. I just want to clear the point on the Indian markets, because we have been a rank outperformer. We're giving earnings visibility as well. But how much is in the price? That's the big question, right, on valuations. So in the pecking order, where does India come? You briefly mentioned that you still like China as well as Korea. So does India come after both these two markets in the pecking order now at these valuations?
Yeah, it's a very good point, right? We think, and that's tactically speaking, so we're talking 6, maybe 9 months. India scored, I think, quite reasonably well, right? But is it the market that has the potential to outperform in the region here in APEC? And there, both China and also Korea probably more likely candidates. And it's not only because, of course, they're a lot cheaper than the valuation-wise than the Indian market, right? But that's oftentimes sort of a necessary, not necessarily a fully sufficient condition. But we do see, since a long time, we haven't seen upgrades in China. Now we do the last 2 months, right? And they're coming out of the internet space. We're seeing very tentative signs of life in the property side, so especially in the secondary, it's not so much looked at, right? But if you want to be sort of leading the curve, right, in China, we're seeing the secondary markets already starting to recover. So it's just a matter of time that the primary markets probably also stabilize, right? When these things happen, you have upside both on earnings and on valuation, right? So I'd say comparing maybe Chinese market with Indian market, right? Both quite solid on earnings in our view, but China has currently that upside potential on valuation that maybe India doesn't have to the same extent.
You said that you see upside in most of the global equity markets. Do you want to, tell us how much more do you think we can run from here across the various markets, the ones you like, and even in India?
Yeah. say across the board, I mean, if you look at maybe say 12 months outlook, right? I'd say pretty much for most markets in line with earnings growth. So this can be 8 to 10%, say on a global scale. India or Asia in general, I should say, because Asia right now has higher earnings growth. And by the way, especially in the cyclicals, right? So India is solid, but if you look at, especially this year, it will be a Korea in particular, it will be a Taiwan and have even higher earnings growth. Now you can argue at some of the cyclicals, so next year maybe not quite as high, but nonetheless, right, we have these interesting markets here in the region. And little bit of valuation support, as I mentioned, from beginning of rate cuts. So yeah, you probably globally end up about 8 to 10%. India, I would argue, could maybe even be a bit higher. But then again, Asia could also do quite well. So yeah, a pretty solid story, I would say, around the globe.
All right, Hartmut, we'll leave it there. Thank you very much for joining us. It's great speaking with you and appreciate it. Yeah, as always.